Some people still argue about whether climate change is real. The market doesn't. It's already cashing in. Insurance companies are rewriting entire zip codes out of existence. Hedge funds are buying water rights like gold. Energy giants are rebranding as saviors. And governments? They're not just fighting climate change, they're trading it. Because somewhere between the panic and the policy, someone realized this isn't just a crisis, it's an opportunity. $1 trillion one. If you love the real stories behind money and power, hit like and subscribe before we go on. Now, let's dive in. For over 2 centuries, the same force that built empires also threatened to destroy them. Energy. Coal-powered Britain. Oil built America's century. What's new isn't the crisis. It's that this time, the crisis itself is the product. The smoke, the storms, the fear, all turned into tradable assets. The story starts in the 19th century, when the Industrial Revolution turned coal into currency. In 1896, Swedish chemist Svante Arrhenius calculated that burning coal could warm the planet, a discovery largely ignored. For most of the 20th century, climate change wasn't an environmental issue, it was a business model. Oil took coal's place. Whoever controlled energy controlled wealth, war, and policy. In the late 1950s, Exxon's own scientists predicted global warming with eerie accuracy. They were right, and they buried it, because you can't sell fear if it kills your product. But here's where the story takes a turn. When governments finally woke up in the 1990s, they didn't punish pollution. They priced it. The Kyoto Protocol of 1997 was supposed to limit carbon emissions. Instead, it created the first global market for pollution. Countries and corporations were given carbon credits permits to emit a set amount of CO2. Pollute less than your limit, and you could sell the unused credits to someone who polluted more. Capitalism's solution: turn emissions into assets. We didn't stop pollution, we monetized it. By 2005, the EU launched the world's largest carbon market, now handling over $1 trillion a year. On paper, elegant. In practice, a casino. A company can cut emissions, which costs money, or buy credits from projects that supposedly capture carbon elsewhere, trees in Brazil, clean energy in Kenya, but the system is porous. Many projects had little real impact. Some forests didn't even exist. Pollution became just the cost of business, and green, a tradable narrative. Renewable energy was next. By the 2010s, wind and solar were investment opportunities, and when capital floods a new sector, history tells us what comes next: the gold rush. This time it wasn't oil barons, but tech moguls and venture funds racing to dominate the next energy monopoly. Tesla became the new Standard Oil, its valuation soaring past Toyota, Volkswagen, and Ford combined, not because it made more cars, but because it sold the idea of a cleaner tomorrow. Behind the scenes, the race for raw materials began: lithium in Bolivia, cobalt in Congo, nickel in Indonesia, the metals that make batteries. The new clean revolution was built on another extractive empire, as dirty as the old. And a new superpower took the lead: China, which controls over 60% of rare earth production and 80% of refining. While the West builds solar panels and EVs, China controls the supply chain. If oil was America's weapon in the 20th century, minerals are China's in the 21st. Then, the financial sector saw opportunity in catastrophe itself. Insurance companies, once terrified of climate risk, learned to monetize it, creating catastrophe bonds. Investors earn interest, but if a hurricane or wildfire hits certain parameters, the issuer keeps their money to cover losses. In short, investors bet on whether disasters happen, and the worse the climate gets, the bigger the market grows. By 2023, it surpassed $40 billion. Every flood, fire, and drought isn't just a tragedy, it's a balance sheet event. Meanwhile, Wall Street invented new ways to brand virtue. After 2008, the financial world needed redemption, or the illusion of it. The answer came in 3 letters: ESG, environmental, social, and governance investing. It was supposed to be the conscience of capitalism, but it mutated fast. By 2022, global ESG assets surpassed $40 trillion, a third of all managed money on Earth. And then came the fine print. There was no single definition of sustainable. Fossil fuel giants were proudly listed in ESG portfolios. Oil companies promised net zero by 2050 while expanding drilling. The same ratings agencies that once stamped junk mortgages as AAA now sold climate virtue scores. Investors got to feel moral while staying profitable, and billions flowed back into the same institutions that caused the crisis, only under a green label. It wasn't deception, it was branding. Behind all of it runs the same thread: control of scarcity. Whoever controls the bottleneck controls the world. The climate crisis created a new scarcity not of oil, but of stability itself. Insurance companies no longer insure whole regions. Banks factor climate risk into mortgage rates. The markets don't deny climate change, they depend on it. The worse the forecast, the more valuable the hedge. Water rights, farmland, high-elevation property, all quietly appreciating as people price in catastrophe. Some hedge funds even call it climate alpha, disaster capitalism in its purest form. This isn't the first time fear became an economic engine. Cold War budgets soared on deterrence. After 9/11, the security industry exploded. Today, the climate crisis plays the same tune: profit through apocalypse. The market doesn't need to solve the problem, just keep it profitable. Still, not everything is cynical. Real innovation is happening: cheaper solar, better battery storage, sustainable agriculture. But once money enters the equation, purity becomes impossible. In 2023, investigations found over 90% of rainforest offsets from one major certifier were essentially worthless. Entire forests that absorbed carbon had already been cut down or burned. And yet the trades continued, because the illusion of offsetting was good for business. It bought time. It sold forgiveness. The uncomfortable truth is that the climate economy thrives on faith, not in nature, but in the system's ability to reinvent itself every time it breaks. Capitalism never wastes a crisis. It adapts, repackages, and sells the solution, often to the same people who caused the problem. When the planet burns, the rich don't panic. They invest. A billionaire builds a bunker in New Zealand. A bank develops resilience bonds. Survival becomes a premium product. And for everyone else, the homeowner in Miami, the farmer in India, the renter in California, the cost isn't abstract. It's insurance that vanishes, food that doubles, electricity that never gets cheaper. The climate economy doesn't divide the world into winners and losers. It divides those who can afford to adapt from those who can't. Crises don't create greed, they reveal it. So when people say, "I don't believe in climate change," the response isn't argument, it's observation. The market already voted. Insurance, energy, agriculture, tech, all priced it in. Belief is irrelevant when capital believes for you. The Dutch traded tulips, the British tea, the Americans oil. Now, the world trades its own survival. Because climate change isn't just the defining crisis of our century. It's the defining asset class. Thank you for watching all the way to the end. If this gave you a new perspective on how money and power really work, hit like and subscribe, because history always has the answers. You just have to know where to look.